Alright, MegaWhale team, welcome back to the channel. We've got a video today. It's going to be a technical analysis for DYDX. We're going to do two videos today. A second one will be an update for Bitcoin. We're going to compare Bitcoin price to the global economy. We're going to be looking at GDP. We're going to be looking at the S&P 500, SPY, and NASDAQ. And we're talking about the potential global economic crash and how that can affect Bitcoin if it actually occurs, which it looks like it is. Before we get into any of that, we're doing a DYDX analysis. If you like the video, remember like, comment, and subscribe. We are only a few subscribers away from 1,000, and at 1,000 subscribers, we've got our $1,000 giveaway. So with that being said, we'll get straight into it. Okay team, so DYDX is in a descending channel. Now a descending channel is inherently a bullish pattern. We can draw a descending channel out where we have the price moving upwards into a channel and bouncing between a diagonal support and resistance zone that are equal distances apart. It's very important to equal distances. If you change the distance, you have a converging pattern, which will be a wedge. At the moment, if you increase the distance, you have a broadening wedge. At the moment, we're looking at a descending channel, which is where the two lines are exact distance between each other at each end. So they're not converging, they're not expanding. Right, that is a descending channel. A descending channel is inherently a bullish pattern, meaning you have an eventual break to the upside out of this descending diagonal line of resistance. You can measure a move by doing a measured move. A measured move is simply taking the distance between the beginning of the trend. So we can draw the beginning of the trend somewhere down over here. We're gonna just look at this chart here and assume the beginning of the trend is here. And taking that measured distance between the beginning and the apex, meaning the top of the resistance, copy and pasting that line over. Let's cut and paste that line. And we're going to put that line back down over here to measure the move upwards. So that is how we do a measured move. You can also take the measured move from the breakout point, and the range between that will be $24 here to $27 will be our target. Now we can do a similar thing on the price structure for DYDX. It is a little harder to tell exactly where this breakout point is going to be. That is kind of what we're waiting for. We're waiting for that breakout point to determine the upward swing. If we had to assume it was now and we actually moved up here, it would be about $24 as a target. So that is how we take a measured move. Measured moves are sometimes incredibly accurate, but they give a good ballpark for long-term targets of macro structures, particularly looking at structures that have remained for consolidation periods of longer than 100 days. This consolidation period has been about 142 days, so quite a large consolidation. And I like to describe consolidations as you imagine like a pressure cooker. The longer it's on the heat, the more pressure, the pressure increases, and it can obviously explode. It's exactly the same as these consolidation patterns. You have the longer and the wider the channel, the more pressure building up, the more explosive the move is going to be. So I'm not too sure what I just did there. Let's go back to our DYDX chart. So in saying that, DYDX in economy, here we go. DYDX has been in this pattern for 142 days. So we are expecting an explosive move when it happens. Now it doesn't mean it's going to happen now. So the purpose of today's video is to tell you guys where our targets are, where the support and resistances are, where the major zones of interest are, what would be the best entry, and where we'll be looking to put our stop losses. So you guys get an overall understanding of the price action, and you can leave the video today knowing a lot more about what to expect and be more confident in decisions you make in the future surrounding purchases and sales of DYDX. So let's take a look at it, guys. We're going to get rid of that. We're going to get rid of that. We'll get rid of that. We'll leave these two up for now. So diving into the short term real quickly, on that hour time frame, we are in a bull flag formation. You can see the bull flag is here. We have our flag pole. All right, so our flag pole, similar to a descending channel, and then we have our flag formation here. So we are currently just sitting above this short term. You can see this diagonal black line, this short term ascending diagonal support. Now this is taken from the bottom of the trend, which will be the 24th of January, which sparked a new short-term uptrend as well when Bitcoin bounced on the 24th of January. Happens to also be our lower resistance of $5.10. This is the lowest the price has been, and we can assume this is our lowest level of support. Our next major level of support is this red line at $4.64. a very, very major level of resistance at the moment. We can see we've had numerous tests. I'm going to draw them out real quickly for you. We've had numerous tests over here, support, a lot of resistance and support, same thing over here. So it's been a very, very strong zone for both resistance and support in the past. And we can only assume now that if we flip this level again, it's going to become a strong support. And if we fail to get back above this level, it is going to act as a strong resistance. Currently, it is acting as a strong resistance. What we can see here is we can see a move back up to this range here. This would be a bullish move, obviously up to that top diagonal resistance, or we can bleed back down and find support somewhere along this diagonal trend line again. Worst case scenario, guys, before we get into any of the bullish stuff, we're just going to tell you worst case scenario so you know what you can look out for. If we lose that $5.10 range, which is here, this bottom of this gray box, we do not have any other historical price action to determine where the price will go. Very, very, very dangerous if we lose that level. We do not have any price action down here. This green candle is not enough price action. We have no historical data. In theory, it can realistically drop and bottom out at any point. So that is basically catching a falling knife. I definitely wouldn't be buying anything under $5.10 if that occurs. The lowest buy I will be placing is at $5.10. That is the lowest price I'll be purchasing this coin in the near future if it actually goes down to that level. Let's get back to the bullish case scenario. So bullish case scenario, guys, we'll be pushing up on support here. We'll be looking for a target of this descending diagonal line, which is our major long-term resistance. And if we flip this level, we'll be looking for a trigger at $7.60. So a trigger means this is a critical major long-term resistance level that if we flip, the trend will flip bullish. All right, we will make a higher high. We would have had a higher low, all right, higher low, all right, and we would have flipped a major long-term horizontal resistance. When we flip this level, you can look for a safe entry. A safe entry could take us anywhere up to about $12. Let's go out to the daily. We'll run a Fibonacci. Not too sure why my pen is still on. Let's delete all this real quickly. We can run a Fibonacci retracement, all right, from the peak to the bottom, nice and simple, and we can see our target will be anywhere about $10.50 to $13 for the first impulse upwards. All right, that gives you profit from this current price of around anywhere between 60 to 114%. All right, so a very strong move coming to DYDX if we are able to break at that wedge. I personally will not be buying until this occurs. My first purchase for DYDX, and I post this in VIP, of course. If you want my exact entries and exits, I'll post it in VIP, so come join, link in the Telegram, link in the description to the YouTube channel. My first entry would be either on a breakout here or a confirmation of a retest here. This will be the best possible entry right here. All right, that's best entry to move upwards. My second entry, so second buy would be here. I'd be buying 50% of what I want. So if I want to invest $100,000 in DYDX, I put 50K here, 50K here. If it goes up here and drops down, well, I'm offsetting my loss from this drop down from the profits I made from this move upwards. So I'm still a profit, all right, guys? So we're scaling in. It's really important that you do not just go 100% in for these long-term holds. This will be a long-term hold if this happens. You scale into a market, and it's really important when you want to sell. Exactly the same method. You scale out of the market and major support and resistance zones. So before we get into anything else, guys, remember our links in the description to our Twitter and our Telegram. Come join those. We do daily polls on our Telegram. You can vote on which coin you would like to see next. And join our Twitter. We do a lot of discussion, community contact, and we like to, get involved with you guys and talk to you guys on Twitter. All right, guys. So now you guys know everything about what we're looking out for on DYDX when it comes to short-term and long-term market structures. We've told you about the descending channel. We've told you about support and resistances. We've told you about where the best entry would be. Next, what we're going to look at is we're going to dive into the technicals. We're going to try to figure out, okay, so the question is now we're trying to figure out, will we break upwards or will we break downwards? That's what we're going to look at now. So we use the technical analysis indicators to figure that out. The first one we're going to be looking at, one of my favorite ones, to be honest, is Ichimoku Cloud. Now we're going to start on our smaller time frame. You can see we've had that crossover conversion line, baseline crossing. It's underneath the clouds, and our momentum indicator, so our lagging span, is also under the clouds. It is indicating a possible move upwards. I would expect a possible move upwards to about $6.70. This could touch the 50 SMA, make a higher high, and then continue. I would assume that this is a good entry point with a small risk. So you'd be entering with a very small risk. If you want to scalp trade, again, if you're not interested in scalp trading, or you're not a long-term, or you're not a successful day trader, just wait until the descending channel is broken. Much safer, much lower risk, and you're trading an uptrend. At the moment, you're still technically trading a downtrend. This is a downtrend pattern, all right? This is what we're seeing here. All this is a downtrend. Trading a downtrend, your odds are stacked against you. Wait until the trend is up. You got a better chance of making successful trades with less risk, and you don't need as much experience to be profitable in uptrends as you do in downtrends. So I'd expect something to see like that. Let's move on to a daily chart. Okay, so daily chart, we're still under a huge cloud of resistance. Obviously, this red cloud is acting as a major resistance. We can see that the cloud is pinching here. There's a chance that this cloud could actually turn green here. Remember, the cloud is 27 days ahead of the current market price. So it could be pinching here. Obviously, when the cloud turns green, it's a good sign. It's a positive sign. It means we have a potential move upwards incoming. At the moment, conversion line is still very high. Lagging span over here, you can hardly see it. It's still very low. Baseline, we're still under the baseline. On the daily, nothing is standing out as a reversal. Although on the 12 hours, we're actually pushing into the clouds now. Again, not too much lagging span, whereas lagging span is still over here somewhere. Our conversion line baseline is still above, indicating a lot of resistance at this current point. And it's kind of telling us right now that we're at a point of huge resistance. We don't have any signs that we're going to continue downwards per se. We are in a major support zone, which is this gray box here, very major support zone. There's no indication that we're going to drop below the support zone unless Bitcoin absolutely tanks. I would expect to see some sort of consolidation here, maybe a push sideways, and I'd be waiting for a definitive break on that descending channel. All right, let's take a look at the market cipher B. This is one I like to use to dictate short-term price action as well as long-term movement. So you can see every time we get that green dot, we've kind of bottomed out and we expect a move upwards. Obviously, the success ratio, it's not always going to be the case, but we can see on the 3-day chart we had that bottom out here, followed by that green candle. We're seeing the price converge upwards, the cipher converging upwards. If we go to a smaller time frame, let's go 1 hour, we can see we had that green dot here again, which can indicate basically we're going to see green price action until we get that next red dot, and then we're looking at selling. But again, on that larger time frame, it looks like we are primed for a move back up towards this resistance on the channel, or at least not that 200-day moving average. I think we said it was $6.79 on that 50 SMA will converge on the smaller time frame. So either a move up to here and down, or a move up to here and then either a breakout and back down. All right, one more indicator we wanted to look at was the RSI and the MACD. We're going to get straight into it. I'm just going to remove these images off the chart to make it a little bit more clear. So bring up that MACD, bring up that RSI. Again, MACD converging small time frame, looks pretty good. RSI about to break the SMA, the 4-time SMA on the RSI, which is a bullish sign, of course. Going to a daily chart, we can see we have that negative momentum. It did just cross down. RSI is somewhat bottoming out over here. Can't see a lot of support. Again, DYDX hasn't been out for too long. It's only been like September, 5 months. So we don't have a lot of history. We don't have a lot of chart data to go off. So we're kind of going off limited data here. Again, if we look at the momentum, still heading down. We do have major support. We did have this wick below and green candle above, bullish engulfing candle. Great to see. Good chance we push higher here. Okay guys, that's about it for DYDX today. I hope this gave you a good understanding of the short-term and long-term projections. Just to summarize, descending channel bullish, expecting a break to the upside at some point. Safest entry will be over $7.65 or a retest of the descending channel once we break. Looking to sell below $5.10. Final entry will be $5.10 if the price goes down to that level. On the short term, we found support on a diagonal trend line, which is a slight uptrend from the 24th of January, finding support after a wick below, bullish engulfing candle on the 1 hour to 12-hour chart, and looks like we're going to push up to retest that descending channel line. If you have any questions, if you've got any comments, leave them down below. Remember, like, comment, and subscribe, and I'll catch you in the next video.